Welcome to the April 3rd, 2020 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offers some insight as to how we set up our charts, what time frames and indicators we use. All right, let's get to the main averages. First up is the S&P 500, which closed with a 2.3% advance on higher volume, which does count as a follow-through day. Now, I want to point out that this follow-through day is not your typical follow-through day where we see just strong price action all over the place with a bunch of leading stocks breaking out above highs on pickup in volume. Thursday was not that type of follow-through day. And if we look at recent price volatility, ATR on Thursday versus the 60-day, it's not even an average day's worth of trading in terms of range. But we want to keep an open mind here. It is technically a fall-through day, and we're not going to argue with that. As of Thursday's close, we don't have too many stocks that look like they've formed proper bases and are ready to launch higher, which may increase the odds of this follow-through not working. We also would prefer to see the S&P 500 get back above the 20-day EMA and hold before we become aggressive on the long side. So we're on a day 8 follow-through day in the S&P 500. In the NASDAQ, there was a 1.7% advance. It still held on to the 10-day MA, as did the S&P 500. I forgot to point that out. So the 10-day MA held here. So the NASDAQ also held the 10-day MA with a 1.7% advance, but volume was lighter, so no follow-through day. So what we don't want to see in the immediate future is any sort of distribution day within the next 2 days. So if either Friday reverses lower on pickup in volume or Monday, that would not be a good sign. That would pretty much destroy the follow-through day buy signal. So during the next 2 days, we want to avoid distribution in the S&P 500. Now on to open positions. We were stopped out of GSX on the open due to the rather large gap down on Thursday. We were long around 41 from an entry on 325 and had stops in place at below 39 and just below 37. They were all triggered on the open here as GSX opened about 10% lower, ran as much as 15% lower, 16 before reversing higher. Thursday's reversal on big volume is a bullish sign because the prior swing low is left intact. Now the price action just needs to tighten up again as it did over here because the volatility has increased this week. We had a 4% position on, so it was with reduced size, thankfully here, because it was a significant gap down, and I believe the drop may have been related to LK due to some accounting fraud, and that stock opened about 80% lower from 30 to $5. Again, so we're out of GSX right now. We have no long exposure. We do have one short position in Okta. We entered at 119, and it did manage to bounce off the lows of the session. That's not a very bullish close, though, as it closed below the halfway point. But we're going to raise our stop to just above the 4.2 high, plus some wiggle room. So it'll be a very small loss if Okta doesn't fall through. We have this downtrend line here. We'd like to see the price action if it's going to open higher, stall around 119, and then continue to sell off. If it doesn't, then we're out with a small loss. As of Thursday's close, we don't see many setups that are actionable here, but we do see where several stocks have the potential, if they were to form a handle, they could be ready to go later next week or possibly the week after, which would give the S&P 500 some time to reclaim the 20-day EMA and hold. So first up is VRTX, and it's a bit easier to see on the weekly chart. Here we have a 1, 2, 3, 4, 5, 6 week cup that is 20% deep. So what we need to see next week is a 3 to 4 day pause, or it could be one full week pause here. That would be ideal. So a 1 week pause below this week's high, but above the 10-week MA. So right around this area here. If there's at least a 1-week pause, then the following week we want to buy over the 2-week high. That being said, if the price action does pull back gently into the 50-day MA next week, we might want to take a small position off the 50 MA and look to add as it moves higher through the handle if one develops. SGen is about a 27% deep cup. DXCM, a little bit more V-shaped here, but this was a 40% pullback off the highs. So if it doesn't pause much and then runs to new highs, we'll likely avoid buying and wait for some sort of pullback. LVGO is an interesting double bottom-like pattern. Here's the first low, here's the second low, here's the midpoint, which is officially the buy point, but it's pulling back into the 50-day moving average on lighter volume here. Could make for an interesting buy off the 50-day MA with small size, looking for the price to hold above 24. And last up is DOCU, which so far is on track for an ugly stall week here at the highs. This is a failed breakout and pull back to the 10-week MA. If the price action doesn't recover back to around the midpoint by Friday's close, then we could see DOCU go sideways for a few more weeks to work off this negative bar. But overall, we'd like to see the price hold above this $80 level, which is just below the 50-day MA. If it returns back to these lows here, that would be quite a bit of volatility in a short period of time, and that would require probably several more weeks of basing action before it can even work off that pullback. All right, so just a quick recap. Thursday was a day 8 follow-through day for the S&P 500, and just because it's a follow-through day doesn't mean we have to buy. The follow-through day is a mechanical buy signal for us and must be confirmed by bullish action, price and volume action, and leading stocks. That's a wrap for tonight's video. Thank you for joining me, and we'll see you again next week.